All right, good morning, everyone. Let's get going. So to say the least, the last couple of days were the wildest we've seen in several years. You know, that's it's not going to stop anytime soon. I mean, obviously, I think things will calm down a little bit, but we're still going to have a lot of volatility. We're still going to have a lot of worry in the market. We're going to get some extreme moves. There's going to be, this isn't going away anytime soon. Volatility begets volatility, and yeah, like I said, I don't see that this is just going to, fall over anytime soon. So just keep that in mind. One of the things that you got to look at here is, the extremities that we saw yesterday morning on the open. At one point, the NASDAQ spot market at the beginning was down, if I'm not mistaken, I saw 9.5%. We triggered limit down loss days, or limit down losses in the futures market on the NASDAQ, on the S&P, on our local market, on the Chinese market. Once again, we've triggered it today on the Chinese market. So it's it's wild, and you don't see that sort of thing often. I mean, you don't see it more than once every few years, and it usually comes around a lot of some sort of harsh bit of news or whatever that's kind of come out to make that happen. Now, I mean, what are we looking at that's made this happen? The same things we talked about yesterday. We're looking at China. Everybody is scared to death of China, and that China's going to implode to zero. I'm wanting to say that the market's getting used to China a little bit as of today, because we're seeing China limit down again today. The Hang Seng's only down 0.75% with China down, limit down. So that's, to me, I think a big win, as well as the S&P future up 31 points with the Chinese market down, limit down. So you're kind of starting to get the feeling the market's getting a little bit more comfortable with that. The other thing is obviously the oil price. So we've got light sweet crude right now as we speak at 38.65. I think it traded down almost to 38 last night. That's, I think, where the other really big piece of this story is coming from, and piece of this panic is because in the high yield debt market in the States, or the junk bond market, the over 50% of the entire junk bond market is made up of energy companies, most of them in oil and natural gas, and a lot of them are at these prices are underwater, so that whatever they're pulling out of the ground, they're losing money on, and that obviously is not a great recipe for paying off your bonds. And that's what the market's worry is that the debt market, you start to get defaults on these bonds and it starts to stampede on itself a little bit. So I think that is what the market is really, really worried about, and as well on top of the Shanghai and the Chinese markets, which has really stampeded the market to the lows. Just to give you an example of the open yesterday in the States and how absolutely wild some of it was. So many people were obviously getting stopped out with some of these drastic moves. You had Apple that crossed yesterday morning at 95 bucks. $95 it crossed. It was trading at 108 not too long before the close in the States. I think it closed around 105. I mean, that's an enormous move. You had Netflix yesterday, which traded to $85. It all traded to $108 as well at one point yesterday in the afternoon session. I mean, that's a 20% move on no news in the stock. It's all to do with with panic selling, with guys getting swung from pillar to post. And so that's I think yesterday, just mentioning those is a bit of a one of many, or two of many. Then I think that those are really good examples of yesterday potentially being capitulation, and that potentially could mark at least a short-term low. I'll show you some of those charts in just a little bit. Getting on into the Asian session, not a whole heck of a lot going on there. That shows Shanghai only down 4%. The last I saw, it was down significantly more than that. It was down about 9+%. We've got the Nikkei, which also got beat up pretty good. But then the Australian market was up over 2%, so a really nice session out of Australia. It's going to be interesting to see where also the bottom is going to get put in on these energy and mining names, which Does it happen at the same time that the bottom's put in this in the market, or is it at a different time from the rest of the market? Because yesterday the mining stocks really underperformed again. All right, S&P 500 index and commodities index, and you can see that the CRB, which is commodities index, have been absolutely decimated. That is what the market, one of the things that we talked about is the market is so worried about is that, you know, we took out the lows of 2009. When we took that out, the market really started to panic a little bit. So most of that is oil. That is really the biggest component of the basket. And like we said, until oil turns around, and I think if oil gets above $40, that's a buy signal for the overall market. I really genuinely believe that you can look at it that way. So keep that in mind. That's something to really pay attention to this morning for the next couple of days. All right, we had Imperial out with numbers today at headline earnings per share. Looks like a nice beat, 16.43 on earnings, but a slight revenue miss at 110 versus 112, and then we had divvy per share, which looks like a bit like a beat. Billy's just crossed on the wires a little while ago. They're actually looking like they missed full year underlying profit at 6.4 billion. Estimates were for 7.5 billion. So I haven't seen everything else on it. I'm seeing stuff continuing to come across there. Copper output down 12%. Petroleum capex at 3.1. Cutting drilling costs. Free cash flow 6.3 billion during full year 2015. So a lot to look at, but it's definitely the worst profit. It says the worst profit in 11 years. The market probably won't be too happy with that. All right. In terms of market data today, we have local GDP. German GDP this morning. Also have, which was dead in line. GDP NSA year on year, dead in line. We had IFO business climate numbers, which come out at 10. We've got the GDP here locally at 11:30. We've got new home sales in the States, consumer confidence, and the Richmond Fed manufacturing numbers. All right, let's get into some maps. You know, like I said from yesterday, I don't want to get too bitty here with the technical stuff. Because it's just been, the moves have been so drastic that it's hard to really gauge things, but a lot of stuff has hit targets. And I'll start right here with Bright. Bright hit the full target here on the breakdown, which is right down here around 120. We talked about that. A lot of people were kind of laughing at that when we were throwing it out as a number when it was trading at 160. And then sure enough, we traded there yesterday. Most of them did reverse off of the lows. You had Sunlum as well, which also bombed here out of this little formation as well, reached its target down around here, and Sunlum. So you can see here as well, Standard Bank on the breakdown of this head and shoulders hasn't reached its target, or hasn't reached its full target, but it definitely reached its second target as we dropped 150. So it reached its first target down here around 138, 140. Hasn't gotten all the way down to the full height of the head and shoulders, but huge reversal off of the lows there. FirstRand, I think without question, making an incredible haul. I mean, we missed it by 7 cents, to call us a liar, but it's 50 Rand basically holding into the close. That's quite spectacular. That's basically where the bottom is. So I think that's an incredible result out of FirstRand to manage to hang on to that. We see it start to push higher today, I would expect, and that'll be a really that could potentially be the bottom end of this one. So a lot of these stocks really finding a bottom, reaching some of the targets, and starting to reverse higher. You know, it's going to be incredibly interesting to see how the next couple sessions play out. But if you see these reversals off the lows, the other things I wanted to talk about. So let's look at Apple, for instance. And we'll look at just look at a 1 year. So you can see what Apple opening up at 95. It actually traded a little bit lower. Look at the reversal here. We can look just across the board at all of these stocks. Look at Netflix, same sort of thing. Look at the reversals that we saw in these stocks. That's really telling. I think, you know, to me, I think that's very bullish. We're going to have to see how it plays out, but I genuinely believe that those are properly bullish reversals. We're seeing a definite a definite rip higher right as the open on what I think is probably people just putting their foot down at price, and we saw a lot of that in our local market as well. Early in the market yesterday, names like MTN as well, that were trading down low 160s at a point. You really just saw buying come in and rip these things up a lot higher. That's another stock that reached its full target yesterday, and I genuinely believe that down there on those sort of levels, you probably have to own this beat-up name, especially in the